Behavioral biases and social influences. From cultural attitudes to unconscious biases, we are constantly being shaped, whether or not we know it. My goal is to show how bias and social conditioning affect our financial decisions and then how we can kind of break free from that. I work for a holding company that has over $7 million of assets under management. And then I have my own personal portfolio that I've grown from 5K to 50K in about 4 years. The first bias that I want to talk about is confirmation bias. Basically, this is just seeking out people who validate your own same opinion and completely ignoring people that think differently. This can be really dangerous because it causes people to get in this huge loop thinking that everyone believes the things that they do, or even getting really radical in their own specific beliefs. No matter what, we're gonna have bias, but if you completely refuse to look at someone else's point of view, you are in the wrong, I think. You need to force yourself to look at opposing views, even if you still continue to disagree with them. It grows you as a person, and it also stretches and molds your own biases and helps break free from them. The second bias is loss aversion. Sometimes we are so afraid to lose that we don't take calculated risks. You see that the market has gone down 10%, so you pull out your money just for it to jump back up and maybe even triple the next day. When if you looked at the fundamentals and you really looked at the company and you confirmed your own conviction and knew that it was good, you wouldn't be worried and you wouldn't pull out at any sign of trouble. Bias number 3 is herd mentality. This affects us in all areas of life, but especially in investing. You might see something on the news about an amazing tech stock or on X or Reddit, and you buy it without looking into the company, without considering if the fundamentals of the company are good. It might be a really bad company, and it might be a really amazing company, but it's way overpriced because everybody's talking about it. So you need to ask yourself, would I still buy this if no one was talking about it? If the answer is no, don't follow the herd off the cliff. These mental traps affect everyone, even the pros. But the more self-aware you become, the more you can turn these things and make yourself more profitable and more confident. Now that we talked about behavioral biases, let's move on to something a little bit more personal: social influence. As much as people don't want to hear it, your investment decisions aren't based completely on the math. A lot of times they are affected by the people who raised you or the people that you surround yourself with. Where you grew up, how your family talked or didn't talk about money, all play a huge role in what you think about risk and wealth building and investing. My first example for this is cultural attitudes towards risk. In many communities, people want safety. They want to take care of their families, so they don't invest in the stock market because that feels too risky and too unknown. Compare this to a family who talks about stocks around the dinner table. Their kids are going to be way more well-equipped to see investing as a tool and not some scary unknown. Example number 2 is community influence. If your family always saw investing as gambling, you're way less likely to get started. A survey in 2021 of Black and Hispanic people found that they are way less likely to invest in the stock market, but with appropriate training and education, their participation rose significantly. It's not just about who you are or where you came from. It's about what tools you equip yourself with. The point is, none of us started from a blank slate. We all have history. We all have families that shaped how we think about money, how we think about investing. And we get to recognize those influences and then decide what parts of them we want to keep with us and then move forward and create our own ideas about money. When people think about capitalism, they either think of it as an evil system to fight or the perfect system for freedom. And I'd like to bring a little bit more balanced approach. I don't think that there's evil and good in this system. I think that it's a tool, and the way that we use it gets to determine whether the outcome is good or bad. Capitalism gives people the freedom to grow, earn, and invest. They get to create new things, they get to support their families, and build wealth all on their own. Capitalism allowed someone like the famous investor Peter Lynch to start as a caddy on a golf course and end up managing billions of dollars. Capitalism takes our selfishness of wanting money, or even our desire to take care of our families, and it incentivizes us to create value for other people. As investors, we want to invest in companies that provide immense value to their customers, because this benefits their customers, meaning it will benefit the shareholders. In a more negative light, something that typically is not very good is consumerism. The idea that buying more means that you are more. It can trap us in a cycle of debt and just continual desire. I heard an amazing quote that not wanting something is just as good as having it. So what's the balance? I think the balance is learning to invest with a purpose. Invest in companies that you're passionate about, that you think can really make a difference in the world. Invest in companies that you like the products of, that provide value to you, because that means that they can provide value to others. You can spend with intention. You build wealth not to flex, but to free yourself and maybe even help someone else along the way. It's not about rejecting the system, which I will admit is imperfect, but it's about using it wisely. So what beliefs did you grow up with, and are they still serving you?